Thank you, and good morning. Yeah, no, as you know, that oil demand is really rising quite strongly. We're seeing, as we expected, with COVID restrictions easing in many countries, mobility is picking up very strongly. We saw record travel in the US over the 4th of July holiday. We're seeing air travel also picking up. In Europe, for instance, flight numbers were up by about 45% month on month in June. So very strong demand in some developing countries, also strong growth in China and other emerging countries. And we saw already seen a sharp rebound in India after the big fall a month earlier when they were hit with COVID. But as we noted over and over again, the COVID pandemic is really with us still. The spreading of the Delta variant is of concern in many emerging countries where vaccine distribution is less is much lower than in the OECD, and we're seeing that this is taking its toll on demand in some of these countries. So this is a concern. That's something we're watching. But of course, now with economic growth still very strong, mobility picking up, we are expecting very strong demand growth in the second half of the year, as we're already seeing right now.
With some downside risks, obviously, on back of that Delta variant. I want to turn to OPEC Plus now. A comment from the report from this month. The IEA says oil markets will tighten significantly if this OPEC Plus stalemate continues. How much of a shortfall do you estimate there is on back of the mismatch between your expectations and demand pickup versus how much production is needed to satiate that demand?
As you noted also, we're seeing oil supply rising. In June, oil supply rose, and in July, we're expecting further increasing as the cuts will continue to be unwound. Saudi Arabia will add more oil to the market, finishing its voluntary cuts. But even so, demand in the second half of the year growing strongly. And if there is no agreement within the OPEC Plus group to increase production further beyond the July level that is now the target from August onwards, we're seeing that demand will exceed supply by about 1.5 million barrels a day on average in the second half of the year, with the fourth quarter seeing the biggest declines. And this is coming after oil markets have tightened significantly already over the first half and into June. We're seeing inventory in the OECD decline sharply. We're back below the 5-year average. In May, the latest month for which we have OECD data, OECD's industry stocks was 75 million barrels a day below the 5-year average. And below the average from 2015 to 2019, that excludes the big surge in inventories that we saw last year. And we're seeing in June that the markets are tightening further. Stocks are drawing in all regions, not just in the OECD, but also in China and other non-OECD countries. So this is, if there isn't further increases in OPEC Plus supply, we're seeing the market continuing to tighten in 3 and 4Q particularly.
I mean, it seems like not just IEA, but the whole world is watching OPEC Plus very closely to see what they decide to do and whether or not a compromise can be reached. Is it your baseline view that a compromise will be reached as far as the OPEC Plus is concerned? And do you have a view on what could happen if, say, one of the members, i.e. UAE, decides to leave the alliance completely?
We don't have a baseline where we assume that a deal will be reached and when a deal would be reached. But we do note that there was a general agreement from the OPEC Plus members that increased supply was needed. All the members agreed to a tentative deal to increase supply from August onwards. The disagreement was on extending whether those cuts should be extended all the way through 2022 and which baseline should be used for that reference. OPEC Plus has stated over and over again that they're in favor of market stability. It's in the interest not just of consumer, but also the producer countries. But when a deal will be met, a compromise will be found, that we're still waiting to see.